Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Dennis Dick, and we have Frank Zorrilla on the line. He's the founder and chief investment officer of Zor Capital. Frank, how you doing on this August Friday morning?
Doing well so far.
So far, so good. So let's just get your general market thoughts here. Basically, hanging out within a few percentage points of our all-time high. Major trading range here. Do you see anything coming out to bust us out of this trading range?
Look, we've been trading in the range like you just said for 6 months, and going sideways. This whole Chinese deal that happened on Monday has done nothing at all to the market. We're actually up for the week, and I thought that could have been the reason to have a major sell-off, and so far that has not been the case. And what's been going on, very simply, within this trading range, underneath the surface, stocks are getting killed.
But there is always some stocks that are holding us up here too, Frank, and that seems to be why the averages do stay up there. I mean, we look at new highs from yesterday, like Home Depot. You had your refiners that were in there yesterday, although they got beat up later on. You had a couple of auto parts makers, AutoZone and AAP, making new highs yesterday. You had a home builder, DHI. So there is some stocks that continue to, money doesn't seem to rotate out of the stocks. It just seems to rotate into different sectors.
Well, so far we have 886 stocks down 25% in the last 65 days versus 364 that are up 25% in the last 25 days. We have 1,448 stocks down 13% or more in the last 34 days versus 676. So yes, there are a few stocks that are going up, like you said, Home Depot, some of the builders, but so far a majority are going down. That doesn't mean anything. The S&P is trading sideways, and what that means to me, very simply, as of right now, S&P SPY ETF over all individual common stocks for the most part.
All right, Frank, we know you've been following Apple for quite some time here. Broke down. I mean, well, first of all, it was punished because of decent earnings. Broke its 200-day moving average and also the lows before the pre-earnings run. Been kind of volatile lately here. Are you still going to maintain a long-term bullish position in Apple Computer?
Look, it's hard to bet against Apple. I don't have a core holding. I do trade Apple. I tend to trade Apple anytime it's down 4 to 5 days in a row, and I trade it for a bounce, and then I leave it as it is. So right now I don't hold Apple. It looks horrible technically speaking, but the company, they're an innovator. They've been around for a long time. They're making a lot of money, and chances are, if you believe in Apple, I think you take the opportunity when the stock is down multiple days to buy some and hold it.
All right, commodities here. Crude making a new multi-year low today at 41.35. You see anything preventing from this sneaking into the 30 handle?
Look, I mean, it's a death spiral. It really is. I wouldn't short it here. If you're into asset allocation and you believe in oil in the long term, you have to buy it on the way down. Okay, and that's that. But if it goes to 30 or 40, are we closer to a low than we are to a top? Probably. But it's not my type of game to get involved in something that's down. Even though if sentiment gets extremely negative, I will take a nibble. But for the individual investors, extremely hard, because oil, I mean, from a retail standpoint, you can only buy, for the most part, buying USO, and that's a very flawed vehicle. But you can probably go in there and dip your toe into an ExxonMobil or a Schlumberger for the long term if you believe in oil in the future that's going to be around for a while.
Frank, what about ExxonMobil and what about Chevron? What about Conoco? Because oil continues to break down here, though, but we have seen Exxon put in a pretty good bottom here in the last few days, and it's actually starting to catch a bid. And it's interesting when you start to see this separation between the big oil stocks and oil itself. Oil going down, yet a lot of these oil stocks actually are starting to trend higher. Even here this morning here, I guess oil's only down 4 cents, but we're starting to see a few bids starting to form here in some of these oil stocks as well. What do you think of the separation, and could this be indicative that these stocks are just getting too cheap?
Well, look, it's only been that separation's only been the last couple of days, so it's too early to tell. But normally, that's a major rally starts with a one-day rally. Every major rally also starts with a short covering rally. But I think it's too early to tell. But like I said, if I am an asset allocator and I'm here for the next 10, 15 years, I think you take the opportunity to buy oil here at these levels. I think it's been ExxonMobil is a couple of dollars off the lows, and it's been 5 days since it bottomed last. It's still trading below the 10, 20, 50, 200-day moving average. I think it's too early. And normally what happens is that you normally have that initial rally, and then you go into some type of range that might last 2 to 3 months, and then that's how the bases build, and that's how you get a decent base to rally off that might last a couple of months. I think now is just way too early. I mean, look, can the stock go to 83? Absolutely. I think it's got a good shot, but more than likely it will base here for a while.
We're on the line with Frank Zorrilla. He's founder and chief investment officer of Zor Capital. Frank, so are you still maintaining, a pretty good weight in, equities, stocks, equities, as opposed to raising some cash here? And is there anything that would if you're still, primarily invested, what would make you kind of go a little bit more to a cash position?
You see, I run my business. It's hybrid. I got some core ETFs, and I keep those for the long term, and I tend to keep them as long as the S&P closes above the 10-month moving average. If it closes below, then I tend to be a little bit more active on that end. And then the other side of my business is short-term trading, and that's how I look to outperform on a consistent basis. So my allocation can change. I could be 75% invested today and then 50, tomorrow. It all depends on the setup.
When you're talking about...
So right now, I am long the SPY, I am long the Qs, I'm long the IWM, and I'm long a few other ETFs, the VEA, and some country ETFs. And I do have some individual stocks. Dennis mentioned Home Depot, which had a breakout. I own a smaller company in that same sector, BLDR, which I bought yesterday. Very similar chart pattern to Home Depot, and it just had a breakout as well. So my allocation to individual stocks changes, can change on a daily basis, and it doesn't... I can be long-term bearish and short-term bullish, and that can change in a heartbeat.
When you talk about short-term trading, Frank, I mean, I don't think you're talking about intraday trading, right? Are you talking a 1, 2, 3, 5-day time horizon? And after that, what do you use? Do you use some moving averages, candlesticks? How do you make your shorter-term trading decisions?
Well, right. So it's short-term. Anywhere between 0 to maybe even 15 days. Let's just take a look at, for example, some of the stocks that I bought yesterday. BLDR has been trading sideways for the last 5 months. With the market going down recently, the stock was actually held up, broke a big time base, and I bought it yesterday through yesterday's highs. My stop loss is roughly 1371. So what I'm looking for primarily for base patterns, stocks that have been trading sideways for 3 to 6 months, finally break that base, and then I'm looking to jump on board. That's my primary swing trading parameter.
Are you usually looking for stocks that are trending higher too? Are you looking at that overall trend from the last 6 months to a year, or are you just looking for that base pattern, even if the overall trend has been down?
I think there's certainly for me, for example, my preference is a base that's been going on for 3 to 6 months, coming off of a 52-week low. That's my preference.
Okay.
Because normally those beaten up stocks, when you get down there and you base for 3 to 6 months, all that tells you very simply that all the sellers that were in control are no longer in control, and you get a brand new set of buyers, fresh buyers, and those are my favorite. Right now, we don't have many of those bottom bases, but if you look at BLDR, DENN, DPS, HSIC, these are all stocks that have been basing for the last 6 to 7 months, and they've held up pretty well over the last couple of days, even though the market has been taking somewhat of a beating. And if some pressure is relieved here in the short term, these stocks should go immediately.
Just going through here, some of the stocks. Do you like to trade the headline stocks at all? I mean, like this lumber liquidators here, just bad news after bad news. Supposedly they have there's going to be a decision coming out soon on whether or not there's going to be a recall. Do you try and stay away from the headline stocks, or is it something you might get involved in?
No, I stay away from that. It's just look, I manage money for other people. It's just too tough for me. It's not in my personality to try to be a hero and try to predict whether it's this will do well or it won't do well. I try to keep it as simple as possible, and that's too tough for me.
Yeah, and what
Frank?
about? Go ahead, Dennis.
I was going to say, Frank, thoughts on the retailers as we are entering retail earnings season. We've seen a few big box, Macy's, some department stores report here disappointed, but then you had Dillard's yesterday, which had a decent report. J.C. Penney, well, I don't know how much you can extract from that, but next week we're getting a whole pile of them. Like we said, we're getting Home Depot, we're getting Walmart. And just to expand on that, on Home Depot, they're reporting earnings Tuesday. I remember you saying you had a trading position in that. Do you liquidate before the earnings reports, or do you typically hold them through the earnings report?
I don't hold through earnings report.
You sell before, so you don't want to get hit with the fundamental news.
Right.
Frank,
What are your
And
thoughts
again,
here on some of these?
and the news could be positive and negative. I think what's more important is the reaction. When you look at Apple, for most people, Apple had a great report. They have X amount of money in cash. They could buy the entire S&P 500, but the reaction was negative. And even Dillard's yesterday, I looked at the report. I think they lost money, or the sales were down, the stock was up big, whatever the case may be. So I think the reaction is more important. I'd rather have a stock report their numbers, okay, and then if it has a great reaction, then wait for a setup to buy that stock. And the stocks that I mentioned, BLDR, DENN, and also what was the other one? DPS. They all reacted well to their numbers, and now they have now they have a proper setup where you can actually buy the stock and have a stop loss where the risk reward ratio is in your favor.
Frank, any thoughts here on Twitter? Supposedly, Bob Peck is speculating that they're going to have a new CEO soon, or maybe going with a triumvirate of CEOs. Any thoughts on that stock? I mean, chart pattern's not good. Has it not been basing long enough for you?
No, this thing hasn't been basing yet. Look, I like Twitter. I use Twitter every day. I think it's a phenomenal product. I think what a lot of people, including myself, I think we're all hoping that it might be like that Facebook situation when Facebook was trading at 18, reported a number, stock goes from 18 to 33, I think, in a couple of weeks, and then it just shoots up. That's what I think is the best case scenario for Twitter, and that's something that I'm willing to wait until we see that huge turnaround as far as earnings and that huge reaction. And then I think, for me at least, that's when I would look to buy it. Even though here you have a stock that, look, it's a great story, man. We all want to buy this thing before it runs, but I think if it's going to run, it's going to run for a few quarters. So you can buy some here, but I will wait until everything is out of the way. I will wait until they report their numbers, and then and hopefully the numbers are great, and hopefully the street reacts great to those numbers, and then you can jump on board.
All right, Frank, just finally here, just taking a look. Any interest in the gold market at all? We've seemed to have cleared the $1,100 hurdle, trading up $1.20 today. Any interest in the gold market?
No. Look, gold just had a tremendous move. The miners just had a tremendous move. You take away yesterday, we're up 5-6 days in a row. Gold and the miners here at this point is something that I like to buy at extremes when they're down huge. If you take a look at GDX is up 15%, or it was up 15% in a matter of 5 days. That's a huge move. But that move came after it was beat up tremendously in the short term, and I would not chase gold or the miners here. I will wait for a pullback. I will wait for them to go down 4 or 5, 6 days in a row, and then look for a trade.
Frank Zorrilla, founder and chief investment officer of Zor Capital, joining us on Benzinga's pre-market prep. Frank, great information. Thanks a lot. We'll speak to you again soon.
Thank you.
Thanks, Frank.